Okay, in this final video, we're going to take a look at actually completing the payroll. In the end of the previous video, we went through this transaction page, what all of this meant, what we're going to do, and now we're going to actually do it. Okay, so what we need is a payroll register. Every time we do payroll, it has to be put on a payroll register. So we're going to start with that. And you were given a payroll register template. Here it is. I've already got a Joshua done, and you, of course, you can change your name from you to whatever your name is. And the beginning cumulative earnings is in there. This is their gross wages from January 1st until just before this paycheck. Okay, I've already got the pay date in there, which is July 15th. Okay, so now we're going to calculate out their current earnings, which is the gross wages. And when I take a look at that, Joshua is $88 at $11.35 an hour. So if I multiply that out, that's $9.98 and 80 cents. Okay, and the ending cumulative is how much gross wages is there from January 1st until right after this paycheck. So we're going to take the beginning cumulative plus the current earnings and add those together. Okay. Now you should, I did not put, for the most part, I didn't put any formulas in. Okay, change that to 0.06. I do have the FUTA and the SUTA formulas in there. Your FUTA used to be 0.008, but so you need to change that to 0.006 in that formula. But I don't have a bunch of other, let me see, I guess I do have some totaling type formulas in here as well. But you could put a formula in there to make sure that you took the beginning cumulative plus the current wages and get the ending cumulative. And that would save you some time of having to add those and also hopefully make sure that you didn't have an error. All right, so the next one is Don. And Don has 88 hours at $10.71 an hour. So if I calculate that out, that's $9.42 and 48 cents. You are 44 hours at $9 an hour, and that calculates out to $3.96. Okay. Now, again, I'm going to add the beginning plus the current earnings, and so I get 11,648.50 for Don. And of course, you just got hired, so you didn't have any beginning cumulative wages, so 0 plus 396 is 396. Okay? Now, you want to make sure I have an asterisk under here, okay, that's letting you know that you need to crossfoot this column. So in other words, the total of the beginning cumulative earnings plus the total of the current earnings needs to equal this ending cumulative earnings. And if it does, then you need to put some kind of mark, and you can just put your initials, okay, in there to show that you did check that, and yes, it does equal. Okay. Now I'm going to skip over the taxable earnings part. We'll go on to the deduction section. There's the FWT, which stands for federal withholding taxes, is the same as federal income tax or employees income tax, all means the same thing. FICA includes Social Security and Medicare together, and so that's that column has to come out. And there's a medical insurance column, but they don't have that in this particular case, so we won't be doing anything in that column. So our FWT and our FICA added together will be our total deductions, and then that will be subtracted from the current earnings to get the net pay. So let's look at the FWT. To determine that, we have to use the publication 15, also known as the Circular E, from the IRS to look that up. We're going to need to know Joshua's filing status, assuming that he got hired in the last few years. Then it just goes by their filing status unless he fills out a separate worksheet to be able to get a lower amount taken out of his check. Now, you were told to just determine everybody is single, so that will keep us a little bit simpler. Okay, so here we have our publication 15T, which has all the tables, tax tables in it, and you are looking for the wage bracket method for payroll systems with Forms W-4 from 2020 or later. In other words, Joshua and Don had to be hired in 2020 or more recently, or they had to make a change in their W-4, in which case they will be on this new system. The old system is still grandfathered in for those employees who had been hired before 2020 and hadn't made any further changes. So you do, in real payroll systems, as of this time, you do need to look at both types of tables. But for this project, we're going to pretend everybody is recently hired, so we're just going to have to look at one table. Now, in that table, it's broken down between their filing status that they put on their income tax return. Married filing jointly, head of household, or single, married filing separately go together. Okay, and so I said that we're going to agree that everybody is single, so we're going to use this last set of columns. Within that set, there are two separate columns. The standard withholding for the single person, or if they filled out some stuff on the extra stuff on the W-4, then we follow this other one. Okay, we're just going to use the standard withholding for a single person for all the employees. Now we have to know how much they made, and we look that up over here on the left. At least and but less than. So Joshua was not, his current earnings was $998.80. So we're going to go down until we find that. Oh, sorry. First we have to look up the correct payroll period. This is for 1 week. Okay, a weekly payroll period. Well, they're paid twice a month. That's called semi-monthly. Okay, here's a bi-weekly. That means every other week. So some months that would only be twice a month, but some months that might have 3 paychecks in it. So that's different from semi-monthly, which is what we're doing. Okay, so here's our semi-monthly payroll period. Okay, and we have to look at Joshua's $998.80, so rounded up, that's $999. Okay, So we're going to go down. We're going to see that 999 fits in at least 985, but less than 1,000. So that's the row we're going to use. We're going to go all the way across to the standard withholding for the single, just $42. So we're going to go ahead and put $42 for Joshua. So let's take a look at Don. His is $942.48. So we look at least $940, but less than $955. We go all the way across, and that is $37. So he's $37. Okay, and then you are $396. And so we're way up here, and we're at least $390, but less than $400. We go across, and the standard is 0. Okay, so we've now had that figured out. Now the FICA is 0.0765, we said in the previous video, times the current earnings for each person. Again, that would be great if you put a formula in there. But we're going to take 0.0765 times 998.8 for Joshua. That's $76. And you need to make sure that you're rounding correctly. So this is $76.408. You need to, when you're calculating it, you need to go out to that third digit to see if you need to round it. So our third digit is an 8, so I'm going to round the second digit up to 1. So 76.41. Okay, now Don is 0.0765 times 942.48, and we get 72.099. So again, the third digit is high enough that we need to increase the second digit, so we end up with 72.10. Okay, and 0.0765 times 0.0765 times 396, and that's 30.294. Now this time the third digit is not high enough to round up, so we have 30.29. Okay, now it is helpful that I do have formulas that are totaling this up as you put it in. Again, you could put in formulas that added the FWT and the FICA. Okay, so there's our total deductions, and again, there's a little asterisk to remind you, you need to cross-foot that column. Since each individual, I added FWT and FICA to get each individual total deduction, I need to do the same with the totals. $79 plus $178.80, and does that equal $257.80? Yes, it does. So here I will put in my initials to show that I did double check that, and yes, it crossfoots. For the net pay, I'm going to take the current earnings of each person minus the total deductions of that person and get the net pay. So when I do that for Joshua, it's 880. 0.39. And for Don, it's 833.